Hello retail traders, this is the Sneaky Snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And right now I'm going to teach you how to catch knives, the secret into catching knives on a big knife. So I'm going to bring up NVDA. The fat cats love this stock. It's number one in AI. They just can't talk about it. They just can't stop talking about it. They talk. So I'm going to show you how we caught the knife today, and I knew this thing was going to rebound because everybody's eyes is on NVIDIA as the number one trade in the market right now. So right out of the gate, we start to create what you would call a descending triangle. The secret to catching knives. The knife catching means buying a stock that has fallen sharply, catching it at its bottom, and then gain on the rebound of the price. So we know that NVIDIA is highly talked about, or talk about it all day long. If CNBC had only one thing to talk about, it would be how great NVIDIA is and how much Tesla sucks. But I love Tesla. So I'm going to draw what you would call a descending triangle. A descending triangle is bearish, and you could see a fall back from that descending triangle. This is a descending triangle, and then we started to create what you call a knife. It broke out of that triangle. Now, how to recognize a bearish triangle is when you hit 1, 2, and 3 times and it comes up to the upside and doesn't break out. On the 4th time down, you're usually going to go ahead and get a pullback 80% of the time. So now we've got what you would call a knife. We're going to draw the channel to fill in this knife. So that's our channel right there. So we're coming down, we're catching it, and then finally, oh, she breaks out. She finally breaks out of that channel. Finally starts to break out of that channel, and that's got your attention. Breakout, pull back, respects the channel, comes up, hits the 21 EMA, and I use the moving averages as resistance levels. Once it starts to gain respect above the 9, that's when I start to get very interested in this trade. That's the 9 EMA, and this is the 21 SMA. So she hits the 21 SMA and pulls back again, falls back in the channel. So we're not bullish yet because it fell back in the channel. Now she breaks out again. She breaks out within a little bitty ascending triangle right here. So we're going to draw that little bitty triangle in, and that tells me that this stock could start to be bullish. So that's an ascending triangle right out of the gate. Now I'm interested. Now we've respected and got out of the knife, out of the trend, and we're starting to go sideways. So now we got to look for what's next. So she came out, she broke into the channel, the ascending triangle, ascending and descending. Ascending is bullish, descending is bearish. And she breaks out of that channel, comes back and creates a double bottom higher low. Higher low means that the bottom was a little bit higher than the last one. So now I'm really starting to get very excited because it respected that double bottom and created a higher low. I'm not in the trade yet. I'm still looking at it. I might have went ahead and took the trade right here and scalped it up real fast and got out of the trade once we hit this double top. Well, that double top started to create an ascending triangle. We're going to draw the price line across that. You've got to look for patterns. Once you break out of the snake, it's all about patterns. You've got to identify what kind of pattern you're going to have. Is it bullish or is it bearish? Classic chart patterns. You can pull up Google, type in reversal bullish patterns, and look. Pull up a chart that can tell you both bullish and bearish, and you can know when to get into the trade and what kind of bull flag there is, and you know when to get out of the trade when you hit tops, or hit like a rising wedge, or a head and shoulders, or a triple top, or a double top. Getting in the bottom, here's that ascending triangle we showed right at the open. You got a bear flag here, you got a bear flag, and anything that comes up like an inverse head and shoulders, a falling wedge, a double bottom, a triple bottom, Darvas box, anything that looks like a bullish reversal. So we started with a bearish flag, a descending triangle, fell into a falling knife, broke out of the trend, started to create bullish flags. And one thing in here that's really going to snap you, you're not in the trade yet. You decide not to take the trade yet. You missed the breakout. You're going, Jim, I missed it. I said, no, you didn't. No, you didn't. What you got here now is you got two flags. The first one, we're going to draw this all the way across. Then we're going to come up here and we're going to draw a flag. Now you've got you another ascending triangle just like this one right here. Now also in this flag, you have another flag. You have an inverse head and shoulders. Left shoulder, right shoulder, and there's your head. So you got your left shoulder, head, right shoulder, and right shoulder. So you've got an inverse head and shoulders. You've got two flags in here. You got the ascending triangle, and you've got the inverse head and shoulders. So it comes up and it creates that ascending triangle and pulls back to the bottom part of that there ascending triangle, and also pulls to the right shoulder of this inverse head and shoulders. You know to take the trade right here. You have a double confirmation. You got a double confirmation of the left shoulder. You got a double confirmation of the right shoulder. And then you got the combination of the inverse of the ascending triangle. So you decide to go ahead and jump into the trade right here. You got two confirmations. When you have two confirmations, that's very bullish. So you're in the trade. You're going, Jim, when should I get out of the trade? Well, you're in NVDA. Everybody's talking about NVDA. CNBC rats on it 5 hours a day. They want that 650. They want that 1150. They want it to go to 1250. They've been saying it for 5 months. And I've been saying, bullshit. Now we've got a new year. I think we can go ahead and break out. But you know that everybody's bullish on this stock, and you don't get opportunities like this on this stock at all, ever. And when you get a big knife like this, all the way from almost what, $500 down to $488, $12 knife, and you got these two bull flags coming out of a snake. And what I mean by snake, I mean by the trend. You want to take it up here to the double top. So there's your exit idea. Double top. Now what's beneficial about this, you decide, okay, Jim, I don't want to get out here. But I'm telling you, it might be a good idea once you hit this top up here to get out. And then you decide to hold a little bit longer. And if you can count to 3, you can trade with me. 1, 2, 3, triple top, get out of the trade. Then she knifes into close. So knife catching is all about looking and identifying a bear flag, recognizing a huge knife. Once you pull out of that parallel or that trend, look for the pattern. We had two confirmations. We had a falling wedge. We also had an ascending triangle. We had an inverse head and shoulders, and we had an ascending triangle. So you had all kinds of confirmations in this trade to take and to get very excited about the rebound in this stock. Then once it broke out of the triple top, 2 bits and a freebie, she went ahead and busted on up. And then the exit idea, 1, 2, 3, get out of the trade. 1, 2, 3, boom, she pulls back. So the secret to catching knives is looking for the bearish flag. Once a bearish flag forms, it could be a head and shoulders, it could be a triple top, it could be anything that is bearish. This was a descending triangle, and it pulls on back, creates an ascending triangle, and then we bounce up to the double top. So remember, Google, study what's reversal, what breakout to the squeeze, and you can get into a lot of these catching knives. Now, many traders will tell you not to attempt this, but if you sit and watch and follow my instructions on how to catch knife, you'll be a winner in this game. Let's go back to that chart, explain it one more time, and then I'm going to go ahead and shut this off. We got the descending, we got the trend, we got the knife, we broke out of the knife, we created ascending triangles, we created an inverse head and shoulders, left shoulder, head, right shoulder, time to go to bed. 1, 2, 3, exit idea, double top, exit idea. You had the high right here, she hit the high right here, and that's a double top exit. And that's it. And this trade right here, if you'd have took that trade, you would have made about $400 a contract. That's it. How to catch knives, the secret to it. This is the sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. Have a happy 2024, and I hope you had a blessed 2023. We had a great run in the market, and we are now reaching levels where we are at resistance. We're going into earnings in a couple of weeks, 3 weeks, so that's what's next. If earnings are good, we're going to go ahead and kick butt and move up higher. The Fed, don't try to fight the Fed, and you'll be all right. Have a great day. Sneaky snake trading strategy.